Hello folks, today is March 20th, Sunday, and futures will open in a few hours. I'm doing a video after a long time, but the reason to not do is because we are still in this price range, tight price range, which is still from this range from last July to October. So still, roaming around this area, and price hasn't exited from this area either towards the upside or to the downside. So if you had gone and watched my previous video, which was in February, mid of February, it covered this price action very nicely. So and it was a very long video in two parts, part one and part two. And the reason for doing those was because to cover this tight range area of, where the price was roaming. So that thing was still valid. So only thing you had to do is go back and look back again to, at those videos versus me doing a brand new one. So, but now since we had done a low around here on 24th February, and then here 15th March, I think, yes, 41.29. So and we got a big rally out of this this area. This orange line has still not been broken. It is still holding here. The previous low was 41.01. We have not tagged. This was done overnight, so we have not tagged this number yet. The lowest we went is that was still also overnight Globex, and that was also 41.29. So these two numbers were done in the night time, not during the day trading time, and we got an oversold bounce with respect to time. So here also see it's let me do this. So here also see it made a low, spent a few days here, and then rushed back up. So here also it made a low, spent few days here, and then went back up. Now the question is up, up, up. What happens after this? Because again, we are approaching. First thing is that this is a big move continuously past 4 days. And the second thing is it is arriving in this inflection zone. So 44.89 is our price cycle area. And your 45.31 is the another important area, 40 and then 45.38 is this demand area. And going all the way till 46.52 is the gap, right? So all this still needs to be taken care of, but the first thing is this area, what it wants to do here. This would be an important area to see whether price gets accepted here or gets rejected here. Now there are two things. One is if this is a bear rally, then price somewhere here or at 46.52 at the gap fill as well, it can fail and come back and hit this 41.01, which it has not touched during the daytime, during the regular trading time. It could hit that, and probably that 40.65 from previous area, that number, and then 39.70 somewhere, that area which I had explained in my previous video. We'll go and check that one. It can come back and hit that. Okay, so this is the resolution of, this is the oversold bounce, got a vicious rally to the upside, and somewhere here it fails and comes back and makes another low. Or assume that this number would be taken care of sometime later in time, and this low is in, and this will hold. Going with that assumption, this has been a very big run. So around from here to somewhere here, assumption is that it will pull back. It should retest this low of some kind for this up move from here to here, some percentage of that, come back down here, and then go back up, fill this gap 46.52, and then decide whether again it wants to come down all the way here, or keep testing, like this staircase, and then this was it. This was the, kind of the very section we got, and everything is good and price wants to move up. The reason I was trying to say that is I still have two paths which I had posted in one of my charts. I think I've posted another pink pattern. A fun fact, if you go and look, is because this is again a bearish setup. So the bearish setup, that bearish setup would assume the price wants to come down much lower from, say, from this area to this area. Okay, so it should get this done if that bearish pattern works out. Otherwise, if that bearish pattern is not working out, and this or 4101 or 4065 or 3970 is the low, then can we get the higher going back to 5,000? So I think this is what I had drawn, assuming this is your starting point and this is the pole of the flag. It goes like this and you continue up. Okay, so this is the path. And the other one would be, you go up here like this, test, as I explained, testing two areas, and then come down. Oops, what happened? One. So this is how it can look. Okay, so this is kind of a bigger picture. Now this I have just drawn the path, but it will generally be a zigzag, go up, go down, go up, go down, and then finally, so staircase, kind of a staircase. But generally this would be the, path line. So I think on a weekly basis, this looks a little bit better because it's more straighter, like this, go up and don't go down. Now, what happened is, on a weekly basis also, price has broken down quite a bit, came down all the way. So now the idea is that it is retesting the breakdown. See, it came back down, it went up, tested here, and then it came back. The second path will be, again from here, go back and test this breakdown area, this from here to here, and then, will this red path be taken, and, it further wants to come down. Or, this was for now the low, and then, with some going with the staircase model, it'll go up, and then we should go back to retest the high. Now, the going back to retest of the high would entail, from this high to this low, what percentage it may do. The minimum, at least ES does, is 618, and 618 to 80% it likes to do it. So somewhere around this orange line, it should be able to retest this, like 47.25, 47.30 would be the area where it would retest on a higher retrace percentage basis. The lowest would be somewhere here to here, or the gap fill 46.52. I think 46.52 would also now come across the 618 area. So 618 to 80% of the retrace, and then it will again be a deciding point whether it is still a bear rally and a new low is still expected, or it'll come back and retest the low sum from this rise up, and then continue to go up. So currently I'm not closing this green path as well, because that possibility is still there, and this red path, the possibility is still there, because, as I mentioned, that we have not exited this area convincingly on either side. So since last year, nothing has changed. Only for a very short time, price went here above 4600, I would say, not 4700 also, because every time it would go there, it would pull back, it would go there, pull back. So this formed a range, tight range for some time, and it broke out of 4700 very briefly, formed a top and came back. So technically price hasn't done much since last year. So it has to convincingly exit this area, either to the upside or to the downside, in order to form a trend. Right now, it is still, range based. Now QQQ also, this was a good demand area from 21, and yeah, this was a good demand area from 21. It came back here, bounced back up, and then broke down and came down to the lower area, right here. And from here it is bouncing back, and it is, see, so this area we need to exit and clear here. So it does have this also has some hurdles to go over, big rally from the low of 12,940, so 12,900. So it broke the 13 something, which number I had, I think 13,100 something. And so this actually broke the low as well. And this is the third low. NASDAQ, so ES had made only 2 lows, but NASDAQ has made 3 lows, 1, 2, and this is the third low. So the thing is, if it has to break down, then it has to break down this one also and come down here, approximately 12,500 or early 12,000s or 12,000. Okay, this is generally a good demand area for NASDAQ, coming back from before as well. Yeah, so do you see this area? So this was a good demand, and it has done, this is also a good demand area, and it completed that, and now it wants to bounce back. Now, again, from here to here, if it wants to continue up, it can go all the way here, it can go all the way here, as close to the all-time high as possible, doing 80 to 90% retrace, which they can do it, and they have been doing it in the past. So it won't be surprising that the bear rally can continue all the way almost till the all-time high. Okay, so I would still be skeptical until and unless this area is also overtaken. I will still consider this as a retracement up versus a trend change. So the trend change will only happen when price is trading above this congestion area or the previous all-time high area. Because, indices, especially ES, does have a notorious thing to retrace much more higher than 618. So this is a good candle on weekly actually, and now it is at this inflection point. So probably, it may poke a little bit higher to, kill some more bears if there are still remaining, and maybe halfway here or somewhere, or, ideal scenario would be to come down and test here and then go back up here and here. But it can still do halfway here. Overbought can stay overbought a little bit, oversold can stay oversold a little bit. There's no guaranteeing that it is overbought, so it should fall. They can flash crash a little bit, and then pick it up and then continue going. That's what generally they do when they don't want to normalize the overboughtness. So what they do is they'll just flash crash few points, like 20 points, 30 points immediately, and then, take it up. So teensy bit relief on smaller time frame and then continue up. So that can happen if, if a lot of killing still needs to happen. So keep this in mind, this red area. If it goes up, it may poke a little bit higher and then pull back, then go up and come and test this red line back and go and hit that red line up. That can happen. Or I had one more thing, which was, where is my daily? Is this, right? In one of the post, I had mentioned that this low was done on Jan 24th, this low was done Jan 24th, and this low was done on February 24th. So, and based on the numbers, this was forming a confluence of 4, 5. So I was expecting that a third low would be formed around March 24th, plus minus few days. Ideally, it would be 24th March, but till 28th March also, we have the timing. So it can go back up here and come and hit that 4,000, 4,100 or 4,065, 3970 or, area again as a new low around this end of March time frame. This was just based on, doing the numbers as well as following this pattern. Again, we have to see if there is a failure around this area or it is just a pullback. So we have to distinguish between those three things, those two things, sorry, pullback versus a failure. Now, RTY also, again, looks like it is coming on a resistance. Now, this is also, this we can extend it right here. Okay, so this was the 1 year consolidation distribution. Earlier it was consolidation because price broke out. Later it is distribution because price broke down. So it is again in a range. If you see on weekly, then this was your demand area. So it did that. I had also covered this in the previous videos, for the weekly, to see that the price will come down here for this weekly and for a short time support at this area can provide, because see this RTY on a monthly is a straight line. Technically, 1, 2, dung, big, this thing. So coming down here, there was no clean demand areas. But on the weekly, you see this 3 to 4 weeks of some consolidation, and that's where it is resting. So this is good, but let's say if it were to break down, then this is coming to February 2020 high, and that would be your very good demand, because price has spent some time in this in this area, right? So this is good, and depending on where it wants to rest, first cut will always be at the top level, and then if there is any interest to go deeper below, so there is quite a bit of price action here coming down from March 20 all the way till October 20. So March 20 to October 20, this area will decide where the price wants to find a demand, provided this goes up, retests the high, kind of an ABC again, and wants to come down. So so far this RTY looks so clean, very clean than the ES and then the NQ. So I would also look at this and see what price is doing, and look for that. YM. See, YM also, I think we had talked about this before. So I think YM may have behaved much better than anybody else. So this area, it held, and now it's going back up. It'll retest the high, and if it fails, then the next layer you have is your March 2020 area or Feb 2020 highs, or rather 2020 high, we can say. It would go and test that first, because that would be your first area of support. Now the reason I'm saying this is because a lot of your stocks, especially the growth stocks, most of them have come to their 2020 breakouts, and a lot of them have gone inside that breakout, inside that price action of the February 2020 high. Some of them have broken and gone below their IPO lows or the February 2020 or rather March 2020 lows as well. Few of them have done that. And then your value stocks as well has been showing a tendency of doing this. At least Amazon is July. It came all the way till July 2020. The next layer would be May, here, and the third is right in this high of the 2020 area, the March 2020, sorry, the February to March 2020 value area. So this also looks a little bit more cleaner. Amazon, though this was a big noisy area, it took something like IWM. It took a long time to settle this, to come and break down, but it's still holding the demand. So the assumption is still to go back and retest the high to some point and then decide whether it's a breakdown to the downside, or for now it is done here and the upside is still going to be there. Your Netflix, see, your Netflix is the one which had, come down to the March, the high of the February 2020, and this is the one which still poked below, and then, to the poke below the high of 2020, and then, came down. I think your Facebook would also be similar, if not different. This was your February 2020 low, and this was your first cut of support, the high, but it didn't honor that and came down below. And found some demand here. Now the test would be to test here like 225 to 250, and then again whether this. Now for Facebook, this area of demand 1890, 187, 181, this is a good demand area with respect to price cycle wise as well. Now if it holds that, then we can assume, provided the market is also good, that the down trend for Facebook is done for now, and it may reverse back at least to retest the high, because this is a big fall, right? This is a nasty area, right? So some pullback up and retrace high into this demand zone, in this supply zone now, and then see what it wants to do. If the market is also stronger, it may do this area, some percentage of from this high to low. Now if the markets are weaker and they also want to make a new low, then this would test 225, 250 area, and then probably break its cycle support and come down more. There is, okay, this is a 3-month, not monthly. My lines, why do my lines look crooked? Okay, so for Facebook, this is the box. So it came only till, so on a 3-monthly basis, this looks so clean now, right? It came to the higher demand and then poked below in between here, and it found some support. Now it's bouncing back, right? This is a very big nasty candle on a quarterly, and so some technical repair. First cut is always a technical repair, but if the markets were weak and it is going to make a new low, then there is nothing stopping it to come down to this lower end of the box, right? So it's approximately closer to 100, so this would serve as a good guideline, as to what things would be doing. So keep an eye on this from this angle and see, what things wants to do. Tesla. So Tesla also, see this, okay, and the price is currently resting here on the top of this candle. This is 901. So your 901 is also a very important cycle on a cycle number on Tesla, and it has been roaming around that for some time before it broke down, and now it's again above 901. Again, big reversal candle on the quarterly. And again, if suppose markets are weak and they want to make a new low, the end of the box is close to 500, right? 500, and then 375. So this high of this candle is 500 and the low of this candle is 379, right? So let's put it here, 1 and some slight support here. Okay, so there is nothing stopping for it to come down to 500 or go below to, you know, in 400 or something. Basically, cutting down in half is will not be a big thing. Okay. See this. This is 1 year candle. This is Jan 20, basically the start of year. So I'm assuming it will be after March. The run up would be after March, considering we had the February 2020 high and then the March 2020 low. So it went all the way up till full cycle run till 901 and then excess till 1250 approximately. And let's see fib retracement. What is this low? 35. And I don't know if Tesla ever traded at $4, but let's assume $6 also. I'm not sure whether these candles are real, but let's say 35 seems more reasonable than $3. So see, your 618 is coming down to 500 and your you know, the 70% extension is coming down to 400. So see, these supply and demand doesn't lie, right? They all come down to the proper fib extensions. So look out for this. So based on the indices and the other movements, we have to decide whether the up move here happening is a bear retracement or a breakdown towards the new low. So as we are going up, this is what we need to see, you know, whether it would be a new high towards, you know, from here to here to somewhere here, or it is going to be, you know, go up, come down here, and then do it. This does looks like it's moving in a channel. Why does it do it? Yeah. So it temporarily broke down the channel and then now it's back in. So the next thing would be to see how far in channel it wants to go. And then, you know, does it break the channel back one more time? Somewhere like this, you know, my lines are generally crooked. So, but again, it's a guideline versus the exact number. So see whether we you know, how far we wants to go on this one, and you know, what it does. Google also so Google also, you know, resting here, again, move back up, you know, test still here or here, you know, multiple layers will be there on a daily basis. You'll see better. But again, if it wants to break here, then, you know, you have your 2000s coming in, early 2000s coming in very fast. So that's there. Yeah, see, so here it's the on a daily you see it better again. So most things on Friday ended up on a resistance area, including the index. So what we have to see is, you know, pull back right away or overshoot some and then pull back. So that's what we will see. Now, the one important thing which I wanted to say was VIX, right? VIX is, as index was moving down and it tried to touch the lower end of the low, your VIX did not take out the high. The high was earlier Jan high. What was the Jan high? Or is this, why is it Feb? Oh, this is the Jan high. Yeah, sorry. This is the Jan high of 39. Even though after that price went lower, made a low and tried to test the low, this did not take out the Jan high, right? Later on, ES made a low in February, breaking the Jan low, but VIX did not do that. So that's an important data point to keep in mind, that VIX did not make a high as the index made a low. And currently it is, this also rested on a support where the others rested on the resistance. So again, pull back a little bit more down towards 21. and then, retest back up. So both of them ended at an inflection point where a reversal on both of them can happen shortly, at least to release pressure, if not a breakdown. So this is something which needs to keep in mind. Oh wow, I had this, I didn't know that. Okay, so see, this is also resting on this, and it has been following this curved line approximately, so Jan also hit this on this line, and this also. So next time when it wants to, let's say, assume that the bear rally fails and we are getting a breakdown and the indices wants to make a new low, then this would easily reach to 40 plus. Okay, so assume this is weekly, right? Let assume in the next coming weeks, for example, immediately, and in the next 2 to 3 weeks, this wants to reverse, the upside it can hit is 40 plus. And so this 37 area, 39 area has been acting as strong resistance for it. Let's assume that it wants to go back up, or rather the market wants to fall down, right? That would be a better way to put it. Market wants to fall down, then VIX definitely need to cross this line. It has to break out of this line in order to hit 50. I think it will hit 50 if it goes above, this 37, 39 area. It will immediately hit 50, or rather hit 50 very fast, which would mean, sorry, it was on weekly, which would mean that it will, cross, depending on when it is doing. If it is done immediately, then it will poke above this curved line towards 50, because so far it is only showing till early 40s. So, that can happen. So keep that in mind, because the VIX has been under a controlled, or rather it looks more controlled than the fear itself. So we will see what exactly it wants to do. Oil. Oil, it hit that 130 area, and it pulled back to the earlier demand of 93, 96, and then now the retest of the high is going on. Also to note is that 130 was also done in the Globex trading. It was not done in the regular hours trading. So that leaves to think that that at least that number would be touched in regular trading sometime in future. The faster it does, the faster we can know whether this move is done and oil will go down. Otherwise, it can range for a long time in the similar range, which $100 is still a very high price for oil, as we are seeing in a daily life. Especially the California gas is like almost $6 a gallon, which is really hurting, right? So if that is the case, then we really want it to touch that 130 price during trading hours as fast as possible, so that if this up move is done, then it can collapse and come down towards 87, 80, 75, or maybe towards 50. Okay. Otherwise, this all-time high is also there, 147, and another extension towards 200 is also pending. Only time will tell whether this will happen or not. But so far, retest of the high, touch that 130, and then decide that is something which is possible and practical. So those are the things we need to keep in mind. Gold also, it broke out, it tested the this trend line, it moved up. The high was 1989, 2089, sorry, and this took out 2089, and this was 2078. So it didn't take out the high by 10 points approximately. Now it's coming back and resting on this trend line. It comes below the trend line, then it'll come back and test the early 1800s. or let's assume I had put out a bearish pattern on this gold, that, you know, if it, oh yeah, I have marked it here. So let's assume that it doesn't take out this high, and it is, you know, wants to fail from here. So this was a bearish ABC, then, you know, we have these numbers to go down to. It can again go below and test here. Else, let's say it takes it out, then you have those 22, 2250, then 2500 targets pending upside. Again, this is also, you know, still in inflection, not decided, but the bearish pattern would, this could be possibly a fake breakout, and then it may want to come down below. So those are the things which were there. And some of the things, you know, I think Square, oops, Square, this is the one which, you know, I had posted about, and it did come and rested on the demand. It, oops, 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 oops. So see, it didn't rest on the upper, it came down to the lower 80, 80, 80, 80, 80, 85. And from there, it moved back up. See, you have to see, you know, some people, you know, we were talking about, and some people were like, the stock has broken down so much, this and that. But you have to see that from this here, it has gone up so well. It moved, and this is the story of many stocks which happened in following 2020, right? So all of them has a similar chart, almost similar chart, that, you know, there's some time spent here, and then there's a big rush out of this. It moved 100, 200, 300%. Some stocks did that, and now they gave back all the zone and are landing on their consolidation area, right? So it is coming down here. So the first order of business is, it doesn't matter what the stock is, or doesn't matter what the company is, good or bad or fundamentally weak, it will try to bounce here once at least, okay? Because it's a strong demand. Price has spent, see, this is 2018, this is 2020, 2 years price has spent time here, and it was a big push out of this price with, you know, fire lighting your behind, to the point that you reach the moon at one go, okay, without stopping. And now it has come down to ground just as it has gone up. So since this is a 2-year history, it is a good assumption that price would bounce here, okay? The same story is for all other stocks as well. Now Square is something which has been trading for some time. UPST doesn't have that much history. What is this blue thing? I don't know what is this blue. Okay, so see this, even though this is not so old, I mean, the IPO wise, the length of time spent on stock market wise, it is still, you know, this is few weeks, not few weeks, maybe February 21 to a few months of consolidation, and then it broke out, came back down all the way to the lower end here, starting point, and then it moved back up. And see, it tested all the way till here, 157, 150, 160, this area here, upside of this, and it failed back. It came down, did not break this low, and if this holds, it can go back up till here, 221, 200, some 200s, right? So this ABC should take it up higher, or if the markets are weaker and these people are done and they want to still go down, it has still more to go down. It can go down, it can break the IPO low as well. All that is a possibility, but following the price action or falling into a big and on a longer time demand, is first cut is always a bounce and going into a supply area which the price has spent quite a bit of time, is first cut is always a sure short pullback. So these are the most probable trades which we can have, Oops. This looks like, yeah. So see, PayPal also similar. See, all the price action looks the same. Go up to the moon, come down to the earth, right? Go up to the moon. All stocks will show same. Go up to the moon, come down to earth. So nothing is different here. Clean price action. You can draw your lines. Just I would say, this charting is not so difficult. It's the most easiest in my opinion, because it's a rocket up, rocket down, and price has spent some time here. So buying in this area is always where you would get a good bounce out of this. You don't have to look what the company is doing, what the fundamental is, what the earning report is saying, or nothing like that. This is just a jerk reaction, knee jerk reaction out of the demand area. And now it is at a resistance here, and we'll see what it wants to do. Pull back here. This is a monthly chart. Okay, so on a weekly or daily, you will see the price action a little bit better. See this weekly candle, beautiful weekly candle. Now go to the daily. It's here. So now there is a big gap here. So such big gaps don't get filled easily. So it may go up a little bit, or maybe pull back down from here, go up, something like this. And it may take some time to fill the gap up, provided the market is also supporting it, right? So AFRM also, I had said that 25, it's looking to come down to 25. And what was the low on the 626? Okay, so $1 short, but from 31 to 25 would be the offset area, which means if you bought around 31 as well, not bought, I shouldn't say bought, but the demand area starts from there, price cycle wise, not the chart wise, price cycle wise, 31 to 31, 30, 28, and then 25. So all of this are all offset to the price cycle, and it would be okay to bounce from any of those areas. So this did, wow, this is like complete reversal here. And let's say here, so we will have to see whether it wants to hit here first and then fail, come down, then go up, or yeah. Oh, I had this here, I didn't know that. Okay, so here it looks more cleaner, right? So it fell out of this box to down towards that 25 area. Now go back up and test this 51, 55, this area, and then pull back, come down, go up, some zigzag happening on this one as well. So after it has fallen down so much, the first cut, we got a very big rally out of the demand, because the indices were also at confluence of price and time. So they also bounced a lot, making everything under them bounce, like the storm lifts all the boats. So all the boats got lifted. Now going forward, let's say the rally continues, after pulling back some, resting some, and all that stuff. What we have to see is which stocks out of all of these bunch of stocks perform better in terms of moving up. Okay, it's possible that just as an example, this moves here, and from there the speed decreases and the movement can be slow. It is more sideways than more up, right? For UPST, it is more up than more sideways. So that's a distinction we need to make going forward, that which stock will perform better in terms of if the market holds. So pick and choose and see, which will give you a better return. What else was there? Probably not sure what other stocks were there. Microsoft. See, Microsoft also weekly, monthly. This is another one which has, gone up a lot in terms of price movement. See this, not very decent pullback on this one. Okay, even in March 2020, it was pretty okay compared to others, right? So this gave a good indication that this is, getting tired and looking for some pullback. and the market provided it, and boom, we got the high was. So this is also completed the cycle, right? So that's why I was saying that early 300s is where you have to be careful, because this can pull back. But apparently this was the very slow to pull back, right? It went to 271, so approximately 50 plus 60 65 points down. For this kind of strong, it's still big, but with respect to this parabolic movement, it is just the tip of the iceberg, if you know what I mean, right? So what we have to see is, again, go back up, retrace from high to low, and then fail and come down. All right. So again, most of the stocks are still exhibiting the same behavior of coming into demand, going back up. Now they have to test the supply. Okay, now that supply will say, okay, now I accept you or I don't accept you. If it doesn't accept it, then you come down to the next demand. If it accepts it, then you try to make a new supply, go up, maybe make a new high, as we have that path towards 51.85 is still open. So and with the time, in the next few months, we'll know whether the path is towards 51.85 or to the downside first. Okay, so that distinction will be there. With that, I'll end the video here, because if you go and look at any other growth stock, the story will be similar. Go to a higher time frame and see if it is from ground to moon and moon to earth, then same demand and supply area. So right now your demand and supply will work the best in order to give you a idea of where the price action will lead, and that should give you a good guidance. So okay, then have a good day, have a good trading week, be nimble, take your profits on time, preserve your capital, and be sensible about trading. Have a nice day, everyone.